Hey guys, welcome back to the channel. So, as someone who's been taking investing seriously for just over a year now, I feel like I can relate to a lot of you guys who are curious and just finally ready to start investing in the new year. If I had to start my entire investment journey all over again in the new year, then this is exactly what I would do to build wealth confidently while also avoiding a lot of the novice mistakes that I made when I was first starting out. By the end of this video, you should be able to invest with complete confidence, B, avoid all the beginner pitfalls that we usually fall for, and C, actually set yourself up for financial freedom, which is the end goal anyways for all of us, right? Hey guys, my name is Hadi. I'm a recent graduate and my goal is to achieve financial freedom as soon as possible while simultaneously creating a community full of individuals who are just as passionate about it as I am. So with that, this is everything you need to know about investing to get started in the new year. Okay, first, what does investing actually mean? A lot of people get intimidated by this before they even begin, hence never actually starting their investment journey. A lot of people think investing is just picking random stocks and hoping they grow big, kind of like an overcomplicated lottery ticket. But investing is actually using your money to grow even more money. Or in other words, buying your future with today's income. Saving your money is kind of like putting your seed in an empty jar. It's safe, no one's gonna take it, but it's not growing, it's never gonna grow. Investing is like putting that seed in a jar that's filled with soil and then watering it every couple of days, maybe a couple of weeks, a couple of months, and watching the roots grow, the leaves grow, and eventually sprouts into something beautiful. That growth is ultimately powered by time, not luck, and that is the backbone of what investing actually is. Okay, now let's talk about why this actually matters in the upcoming year. I'm sure you've heard this term called inflation. Every single year, inflation is getting higher, interest rates are growing, and because of that, the cost of living is growing significantly all around the world. So if your cash is just sitting in your savings account, earning like 1%, while inflation is growing at a constant rate at now 3%, then you're ultimately losing money long term, right? Think of inflation like a little monster that's nibbling away at all of your savings every single year. The only way to beat that is to make your money grow at a faster rate or at a higher interest rate than inflation is. So instead of working for your money forever, the goal is to make your money work for you. Every single dollar that you invest becomes a tiny little employee that works without sleep. And the more of these tiny little employees that you have, the sooner you'll be able to buy back your time, which is essentially what the whole goal of investing actually means. Okay, let's get into the building blocks of how investing actually works. So stocks, funds, and how to actually start. So stocks, let's say a company wants to expand its operations. They want to hire more people, create newer products. What they will do is they'll either get a loan or they'll start selling shares of their company. Each share or stock equals one piece of ownership. Now, in an ideal world, you'd be able to purchase these stocks or shares on a company website, right? However, that's not the world that we live in. These stocks and shares are traded on a marketplace, which is like the stock exchange. So you've probably heard of the New York Stock Exchange, the Toronto Stock Exchange, the London Stock Exchange, etc. And to purchase these stocks or shares from the stock exchange, you need to purchase it through something that's called a broker or a brokerage. Now, some of the more common brokerages you've probably heard of are Wealthsimple, Questrade, Robinhood, etc. Now, each stock or each share, they can either grow in value or they can decrease in value. If they grow in value, that means the company is becoming more profitable, the company is earning more money, and they'll reward you by either increasing the price of their stock or paying you dividends, which is basically like paying you rent just for buying their stock. It goes a little deeper than that, which we can dive into a little bit later, but that's essentially how it works. This is why index funds or ETFs are so powerful. It's instant diversification, very little risk, and historically, they almost always outperform people who only invest in individual stocks. So there's your solution. If you only care about building wealth, ETFs, ETFs, and ETFs. Okay, now dividends. I want to touch upon this just a little bit, although it's not a strategy that I would recommend. I want to talk about it just a little bit in case it's something that you want to explore. So dividends is basically a payment that a company pays you simply for holding their stock. If you purchase a stock and the company pays dividends, they're using their profit and distributing it to all their shareholders either monthly, bi-monthly, semi-annually, or annually. Very similar to how rent works. So you own a property and you're renting it out to some tenants. Those tenants are going to pay you a monthly payment called rent. The same way that a company is paying you dividends simply for owning their share. Now, the part that people don't really talk about is that it takes a lot of capital in order to make a significant amount of dividend payments that you may actually be able to live off of. It's a cool idea because it's passive income. However, if you're not owning like $100,000 or $200,000 worth of a dividend stock, you're not going to be making any significant income. And now I want to talk about compounding. Compounding is essentially what makes investing so powerful. It's kind of like a snowball effect, right? But compounding means your returns are earning their returns. So snowball. You start off small, but maybe 5 or 10 or 20 years down the line, the snowball gets bigger and even bigger than that, and then even bigger than that. And at the end, your returns are ultimately working harder than you ever could, and your money is compounding faster than you can earn an income. And that is the true power of investing. All right, let's address the part that stops most people from ever actually beginning their investment journey: the fear. Because most beginners usually end up asking the same kind of questions. What if the market crashes? Historically, the market has crashed 19 times, and each of those 19 times, the market returned to new to all-time highs. If you think the market is going to crash, then panic selling is the worst thing you can do. My strategy that I recommend for most beginners is to just dump your money in the ETF and forget about it. Because 99% of the time, if you're always watching your portfolio, you're always going to panic. It's going to go red every single day. It's going to go green every single day. And if going red makes you panic, you are never going to survive this. Just leave your money in your investment account and forget about it. If the market actually does end up having a real crash, the news will be loud enough that you'll hear it no matter where you are, and then you can deal with it accordingly then. What if I lose money? Listen, if the housing market crashes, you're not losing money, right? You're still living in the same house. You're just going to wait for it to recover. The same theory applies to investing. You only lose money if you actually sell the stock. If the stock goes down, but you still own it, you haven't really actually lost any money. You just have to wait for it to keep growing, and you can sell it then accordingly and capture the gains. That's when you know if you've either lost money or you've made money. Do I need a lot of money to start? No, you don't need a lot of money. You don't need thousands of dollars to start. Even investing $25 to $50 a month is sufficient enough to capture the power of compounding in a decade's worth of time. It's like going to the gym. You don't lift 200 pounds on day one, right? You lift whatever you can, and you keep coming back to the gym every single day, and eventually you'll end up lifting way more than 200. What about crypto and AI stocks? They're flashy, I know, but this is how you want to build your portfolio. You want a solid base, so ETFs and index funds should be what you start off with. The middle should be just stocks or individual companies that you actually trust. And the very tiny tip of the should be those exciting, super high risk crypto or ETFs or stocks that are all about AI. That way you have a very solid and balanced portfolio, and a little loss with a high risk isn't going to hurt your entire portfolio. Okay, now that you understand the basics and the fears of investing, here are some quick, smart investing habits that'll help you feel confident investing in the new year. Number 1, diversify. Don't put all your eggs in one basket. Don't only own finance stocks. Don't only own tech stocks. Own different stocks, or even just own an ETF that is completely diversified. That way, if one company does bad, the others will stay afloat and keep your money at a minimum gain. Number 2, automate. Set it and forget it. Put on your recurring investments for every paycheck, $50, $100, $500 a month into these ETFs, and that way you can just avoid looking at your investments and let it grow quietly behind you. Number 3, simplify. Don't use too many brokerages. Stick with 1 or 2 that you trust and open your accounts there. That way it'll be very easy and you can keep track of it without messing up anything. And finally, patience. It isn't a short sprint, it's a long marathon. The longer you let it simmer, the better the returns are going to taste. You don't need to predict what the new year is going to look like. You just need a plan, and you need to actually stick with it, and that's how it's going to work. So start small, but stay consistent. You know, the best time to start investing was yesterday, but the next best time is today. If you like this video, if you want to see more videos like this, hit that like button, subscribe. It really helps other people also find this channel, and I'll see you in the next video. Thank you.